Hi, friends. This is Colin Richards, president and founder of Lord & Richards, and we're in a little series on how to pay no taxes on part of your money. We're talking about the government incentivizing you and me to help protect our national interest by investing in oil and gas. But here's the key. These incentives are being constantly threatened by the government and by groups and special interests. President Obama wanted to repeal these. President Biden wanted to repeal these. And so there's no certainty that we're going to have these forever. And so the idea is take advantage of these while they are available. Now, this is not something as simple as simply participating in stock ownership of an oil company. That will not get you these incentives. It's not something as simple as having royalties. Some of my clients have oil and gas royalties from oil that was discovered on their land, right? So that's not what I'm talking about. It's not going to get you this incentive. You must bear the cost of drilling and of development. This is the specific area that the government has targeted that they want to encourage, and you must be an accredited investor to participate. That means you're earning at least $200,000 or $300,000 in income, and you have a high enough net worth, usually $1 million. So what am I talking about specifically? I'm talking about oil and gas intangible drilling costs. Intangible meaning it's not equipment, okay? That doesn't count. So we're not talking about, buying facilities. We're not talking about production facilities or tangible property. It's costs related to the drilling and preparation of the well for production. Okay, intangible drilling costs. So the bits and the drill itself and all of that cost that goes into setting up a drilling operation. And it must be a company working in the interest of the U.S. That is, it is a part of the U.S. economy. Generally, we were talking about drilling going on in the U.S. itself, the Gulf of Mexico, etc. And it can't be merely a passive investment. In order to take advantage of these credits, intangible drilling costs, these tax incentives, then you must have skin in the game. You must be able to lose money. So this is important. You're going to be exposed to the downside of this operation, okay? So you need to do this discreetly and as part of an overall strategy. As someone has wisely said, don't let the tax tail wag the investment dog. So we need to be investing in well-vetted opportunities to develop and to produce drilling operations. And it can't be just a passive loss, which can only apply to passive income. So it has to be losses, that is, you invested and it's treated as a loss against ordinary income. It's like a W-2 write-off. And so if that's the case, then according to IRS Code Section 263C, independent investors can deduct up to 100% first year, in the year that you do it, and it can be applied to all income sources. It can be applied against your ordinary income. Maybe you get a bonus through work. Maybe you're just a high-earning medical or legal professional. Maybe you have a business. It can be applied against all income sources. But you have to be exposed to risk. So there's the investment side of it. Now, how do you invest through these? Well, a lot of times you're investing through what's called a master limited partnership. Now, don't get excited and go form your LLC, limited liability company, because it is best for you to have direct ownership or be a general partner. You've got to do that in order to get this income deduction. Okay, so if you're going to take it against your income, you have to own it, not your company. Okay, so in the first year, you're going to own this as an individual or what's called a general partner, where you have skin in the game. And then some of these are set up to automatically switch you to now ownership in an LLC to avoid self-employment tax in subsequent years when you're now taking income off of the investment. And we're going to talk a little bit more about this in my next segment. But if you're a high-earning taxpayer and you're tired of the rates and the brackets that you've been subject to, then it's time for us to have a conversation in the context of an overall financial strategy. At Lord & Richards, we are equipped to help people, whether they're getting started or whether they need the kind of advanced tax planning I'm talking about. We have an enrolled agent on staff. We have a tax attorney that can assist our clients in complex cases. We can help you. It simply starts with a phone call. And we're talking about how you can avoid paying taxes legally, not shirking your civic duty, not blowing off the legal requirements to pay taxes, but rendering to Caesar the things that are Caesar, but then not paying over and beyond that. You want to be a good steward of the money that God has entrusted you, and also be able to render unto God what is God's. And so in this case, it's not just about giving, it's about the kinds of investments that high-earning taxpayers who find themselves in onerous brackets like 37% plus Colorado state or other state taxes, so well into the 40+% bracket. Californians are paying over 50%. It's just incredible that the government would confiscate half of everything you made. It's onerous. And so we owe it to ourselves as good stewards of what God has provided us to take advantage of investments that allow us the opportunity to avoid paying excess taxes. And so in our last segment, we talked about how to invest directly in oil and gas intangible drilling costs. You can do that through a master limited partnership or direct participation programs, but we're not talking about stock ownership of energy stocks. We're not talking about royalties off a well on your property. This is a very specific investment. And so if you properly take advantage of it, you can deduct 100% of your intangible drilling costs, which goes directly against all other sources of income. So it's a fantastic program designed to encourage investment in the oil and gas drilling. It's for our national security and our national best interest. But here's the thing, at Lord & Richards, we help people at all different walks of life. And some of you may not be working anymore, right? You may not have a high income either through a business or through a well-paying job. But here's the thing, many of you may have IRAs in your portfolio. That is a personal account, an individual retirement account on which you have never paid taxes on the money, either on the original contribution or the growth. Now, that was great when you were young and investing and took advantage of the tax deduction, but to be honest with you, you would have been far better off by the time you retired having all that money in what's called a Roth IRA. And so the government created a Roth IRA so that you could put money after tax, so these weren't deductible savings. But here's the thing, a lot of times when we're younger, we're in lower brackets, so I'm really encouraging, especially my younger clients, put your money, your 401k into a Roth 401k, your IRA into a Roth IRA, and be tax-free when you retire, okay? But if you haven't done that, let's just say you did what everybody else said and you invested and you did that in an individual retirement account, you have 100% taxable income coming to you throughout your retirement years from that IRA. And it may be a significant amount, and it may increase how much you get taxed on your Social Security, thus increasing your overall tax burden. That's a bummer. Well, at Lord & Richards, we do comprehensive financial planning to help you achieve retirement freedom. As part of that, we do comprehensive tax planning with a deep bench of tax experts, certified financial planners, enrolled agent, tax attorney, all at our disposal to take care of you. And here's an idea, and I want you to think carefully about this. Most of the time when we hear about IRA to Roth conversions, that is the window that the government gave us to transfer our money from that forever taxed IRA to the never again taxed Roth, we sort of back off of that because we have to pay taxes in the process of converting, right? You take the money out of that IRA, we call it a tax time bomb. You don't want that thing to blow up in your face. And so people really have to do it slowly and gradually to keep themselves from throwing themselves into high brackets while they're doing these Roth conversions, a economic experience, not a religious one, okay? So converting your money from forever taxed to never taxed is great, but it can come at a cost, and we want to carefully manage that. But here's the thing. By using oil and gas drilling, by investing directly in intangible drilling costs, you could potentially offset all of the tax of your IRA to Roth conversion. Now, here's an idea, right? So with your money that you pull out of that IRA and Roth, that's going to stay in a Roth. but with other money that you have available and accessible to you to invest that is appropriate for at-risk investments, because energy, oil and gas, drilling, these are all at-risk investments and should be part of your portfolio, not the entire thing. And of course, you must be an accredited investor with a high enough net worth to justify. But once we pass those hurdles, we've got an appropriate amount, then you can apply the entire amount of your investment that goes to intangible drilling costs against the amount that you converted from an IRA to a Roth, and thus wipe away those taxes. It's a way to not only not pay taxes on the money you invest, but also a way to never pay taxes again on your IRA. What a great strategy. Now, this is advanced tax planning, okay? I don't want you to do this yourself. I want you to have help. And here's the cool part. At Lord & Richards, that help is completely at no cost to you. We will help you do and develop your tax plan. It doesn't mean that your investments don't have a cost. Of course, at Lord & Richards, we charge for the assets under our management, but we charge a low fee that is comparable to all the other registered investment advisors out there, fiduciaries, registered investment advisors, not just brokers or investment advisors. And so we want to help you. We want to help you develop a complete plan for retirement to not only cover this tax issue, but risk in your portfolio to balance that so you never run out of money before you run out of life. And we want to develop that in concert with you, a beautiful collaborative process. We're doing this every single day to help clients and folks just like you to avoid paying excess taxes, avoid being bankrupted by the high costs of medical care, avoid running out of money before you run out of life, as well as avoid being subject to severe market downturns through protected alternative investments. All this and more is available to the clients of Lord & Richards, and we're helping thousands of people today. You could be the next one we help. It simply starts by sitting down, visiting together, and it begins with a phone call.